What is the real process for senior property tax exemptions? Imagine saving money on your property taxes just because you're a senior. It sounds great, but how does the process really work? Let's walk through it step by step. First, you need to check if you qualify. Most states set the age requirement between 61 and 65 years old. For example, Texas requires you to be 65 or older, while Washington state starts at 61. You also need to live in the home as your main residence. Some places have income limits, like Boston, where single seniors must earn no more than $25,834 in gross income for the year 2025. Married couples have a higher limit. Next, you'll want to contact your local county appraisal district or tax assessor's office. They handle all exemption applications. Many districts have forms you can fill out online or pick up in person. In Texas, the form is called Form 5114, and you can apply online, by mail, or in person. The application is free and usually only needs to be submitted once. Some areas ask for re-verification every 5 years to keep your exemption active. Timing is important. If you turn 65 during the year, you become eligible that same year. To get the exemption on your current tax bill, you should apply by April 30. If you miss that deadline, you can still apply within 1 year of turning 65. Your exemption will then be applied retroactively to the year you qualified, but it might take a little longer to see on your bill. Some places even accept applications up to 2 years after the delinquency date, which is usually February 1st. When applying, you need to provide proof of your age, like a driver's license, state ID, or birth certificate. You also need proof that you own the home. If your income limits matter in your area, you'll need to show income verification too. The local office will tell you exactly what documents are needed. In Texas, seniors 65 and older get an extra $10,000 exemption on top of the basic $25,000 homestead exemption. This means your home's taxable value is reduced by at least $35,000. Keep in mind, this reduction only affects the taxable value, not the market value of your home. If you qualify for both the over 65 exemption and a disability exemption, you might have to choose which one applies for school district taxes. If the senior passes away, the surviving spouse can often keep the exemption if they meet certain rules. They need to be at least 55 years old, own and live in the home, and apply to continue the exemption. The tax protections stay in place as long as they live there. Sometimes, you might get the exemption automatically. For example, in Texas, if your date of birth was listed on your original homestead application or other documents, you might automatically get the exemption once you turn 65. But you still need to meet the basic homestead exemption rules. Starting in 2024, appraisal districts are required to verify that seniors still qualify every 5 years. This means you might need to confirm your eligibility periodically, but the process is usually simple if you continue to meet the requirements. There are also other relief options for seniors. Some states offer a tax ceiling, which limits how much your property taxes can go up each year. Others have programs that let you defer paying taxes until you sell the home or settle the estate. Disabled veterans and those on federal disability benefits may also qualify for additional programs. Getting a senior property tax exemption is a straightforward process, but it's important to pay attention to deadlines and gather the right documents. Knowing your specific state and county rules helps you succeed. Once approved, the exemption stays in place as long as you keep meeting the residency and ownership rules.